and 11th to 20th, and post 20th to 25th, what are the levels you need to track. And then I'll be talking about daily run rate formula, which will give you some 10% return every day. Mid-month formula, when to take position, 2 about compression, 3 about average true range. And expiry date formula for Nifty at the money option, that one, and Bank Nifty ATM options. These things I'll be taking it forward. If time permits, I'll finish everything. Else, I'll stop with first 3-4. So this will be the agenda. Takeaway will be stock market gives either phenomenal losses or phenomenal profits. So your job is to reduce the losses, and once you reduce the losses with the least stop loss, the stock market cannot but return stupendous profits. So stop loss is key. That is the main thing. So 2 things. 1, market returns huge losses or huge profits. So if you reduce your losses, the other way around is huge profits. No other way. Okay. So that will be the takeaway of the meeting. So any questions on this? Fine. So I don't get any feedback. So I presume I had clearly set the agenda as well as the takeaway, right? Niku?
Yeah, go ahead.
Yeah, carry on, please.
Okay.
Yes, sir.
So you are asking about the agenda and the takeaway. So this is the agenda and takeaway. I think you can see the screen also. So everyone is able to see my screen or what?
Yeah.
Yes.
Yes.
Okay.
Yes, sir.
Okay. So about Fibonacci numbers are organic, natural numbers. The entire organic universe runs through these Fibonacci numbers. Anything you see in nature will be in Fibonacci numbers. So options are organic compared to futures and equity. Options are organic. They are born and they die within 90 days or 180 days as the thing is ends. So anything organic that follows Fibonacci, that is premise number 1. Okay, and that is why options return huge value. Okay, so once that is understood, we don't have to fear about options. A lot of people have wrong notion that options are very dangerous. Okay, and anything that is offering more risk actually offers better reward also. So we are going to talk about mitigating the risk and enhancing the profits. Okay, so these are all the numbers. 0, 1, 1, 2, 3, 5, 8, 13, 21, 34, 55, 89. These are all the Fibonacci series. I have sent all of you one Japanese Fibonacci sheets, which is developed by some Japanese person, which works on dot, which gives you the entry level. Most of your thing gives you entry level. That doesn't give you the stop loss, or that doesn't actually show you the target. But this Fibonacci sheets, it's a leading indicator comparing to other MACD, all other indicators. This is a leading indicator that makes you position yourself for a better trade. Maybe some half an hour ahead, you can be ready for the trade. So if you have seen, I have posted, if this option comes down from 90 to 7 rupees, buy for 400% return. And that would have come down from 90 to 7. Even last week I had posted, last time I had posted 18,000 call option will come down from 150 to around 40 levels or 50 levels. Take position, and it actually came down, and that returned huge value. Like this, you can be prepared for a number. When that number comes, you can take a position with least risk reward ratio. That is about Fibonacci numbers. 2. Say how do they work? This is a sheet which I had shared. Okay. So if 34 is the column G is the Fibonacci main numbers. The numbers on the right are the Fibonacci projections, and number of the on the left are the Fibonacci retracements. So this is the basic about Fibonacci series. Okay. So we use this sheet to take positions or exit positions. This I had spoken to in length in the last video conference itself, but I am again telling this so that new people who are in can understand it better. Okay. So in this we are going to take position up to 10th, whatever option depreciates from 260 to 185, 189 or 167 to 170. We are going to take position. Okay. Say it starts from this level and comes to 178. These two levels you can take position. So from here it actually goes to 233. If you had seen even today, Srikanth or Bharat would have posted, one option came down from 267 levels to 178 and it returned to the 233. So this is for the first 10 days. So you don't have to look, which option to choose. You don't even have to bother about the strike price. You just have to bother about the option value. Whichever option, will it be 8,500 or 8,350 or 8,100, you don't have to bother about market being bullish or market being bearish. Okay. So you have to choose an option, whichever option, 80,000, 90,000, 80,500, wherever the market may be. You have to choose an option which is around 288, 267 levels. That should depreciate to 178, 180, something like that. From here, if it goes back, then you take a position here with lower stop loss, and it returns up to 233. Okay, this is a very simple formula, no brainer. You don't have to track much of technicals or anything. Best thing is you are prepared when the option is depreciating from 267 levels to 178. You are waiting for that opportunity. There you enter, and then you know the stop loss, and then you know the target. So as simple as that. Did I put it correctly? Did everyone get it correctly? Any questions?
So, Guru, what I understand is this. Sorry, this is Ramesh Sharma speaking.
Yes, speak.
What I understand is you're looking for the option price, and once you see it coming down to the level of say 178 or something, and now when it starts moving up, that is the time you take a position. Is that correct?
Correct. You are not going to catch a falling knife.
Correct.
So it can stop at 178. It can go to 144 also. Okay. So you'll get to know. Once it stops and comes back, you buy. The stop loss.
Yeah, but normally what at least I've noticed is that these prices fluctuate a little bit. Say around, if it's say 170, it goes up to 185, 165, and then it goes up and down. So you need to let it settle down, and then once it starts moving in the direction say upwards, then you take your position.
See, for that, you were there in the last session, Ramesh ji.
Yeah, I was.
Okay. So that's why I always tell people, whenever you take a position, look at the other side option. Okay, you are going to choose identical price option, maybe 17,000 call and 17,000 put. Okay, so if 17,000 call depreciates from 322 to 178, the other side will go to 521, right?
Correct.
So when taking the position of the 17,000 put, which has come down, okay, this is a confirmation. If the other side doesn't go beyond 521, this is a buy.
Okay.
As simple as that. So, for buying the lesser price option, you are going to look at the other side. That will give a confirmation. This 521, from here it will just crack like anything, very fast. Okay. So here you will come to know when it is not able to pierce the 521 and it has come down to 178. There you will see sudden spurge of some 10,000, 50,000 option buying. That's a clarity it is going to give.
So when you say Guru, other side means PE versus CE for the same strike price.
Yes. So you'll be looking at a price in the start of the day, both will be 322, right? You are going to
But
see yeah.
sorry. The question here is they both are not 322. They're let's say one up and one down. But basically, as long as they're following the same pattern that you just described, that is what one needs to look at.
Correct. So you are going to choose an option. I'm not talking about the strike prices. I'm talking about the option prices. Okay.
Option.
Say 8,000 call, maybe lesser price. 8,000 put, maybe higher price. Okay. Put are usually costly. Even if you have seen today, 7,700 put would have been around 58, whereas 8,400 call is around 45. 7,700 was a bit far away. 8,400 was a bit near, when the market was around 8,100. But puts were costlier by almost 30%. So you are not going to bother about an option which is your strike price. You are going to bother about the option pricing. Am I clear?
Yeah, that's clear. Thank you.
Okay. So you are going to choose in the start of the day. You are going to choose identical priced options. Okay. One option will come down from that price as the market goes up. The other option will go up. Okay. If it is from 322, the other side will go to 320, 521, or it will go to 322 and stop. It will go to 343 and stop. Before this, from 288, it goes to 322. Before it goes to 343, the other side will go to 322 to 288. So if it stops at 343, the other side stops at 343. 288 is a buy level for you for the same price. Likewise, from 322, if it comes down to 178, and the other side option is not able to go beyond 521, you can sure shot you can buy with just 2 to 3 rupees stop loss, and it will come down to 233. And the other side will come down from 521 to 377. Risk reward will be 1:20 minimum. And this is for the day 1 of the expiry to 10th day. And once it becomes 11th to 20th, you are going to look at other level 222 to 150, whatever depreciate from 250 to 220 to 150 or 144. This you are going to choose. And post 20th to 25th, you are going to choose whatever option comes out from 155 to 8972. You can choose, this will give a very big risk to return. Very simple to follow. That's all about, these two Fibonacci numbers. I told you about that. And I told you about the what opportunity you have to look for up to 10th, up to 20th, and up to 25th. So this is clear. Any doubts? I had a lot of doubts when I took
Hello.
this session. Yeah. Yeah.
Hello.
Yeah, I'm hearing you.
Yeah.
Ji.
Yeah. See, basically, what question I have is, let's say today is the second day of the starting of the option series.
Yeah.
Okay. Now,
Yeah.
what you are going to say? Let's say we are talking about a Nifty options. First step will be we are going to select an option which has same premium. Call and put has same premium, right?
Perfect.
That is the second step. And we will be able to find that those kind of calls or put. That's what I wanted to know.
Correct. I'm not talking about the strike price. I'm talking about the option price. Let it be 9,000. Let it be 7,000. The option pricing will be the same.
Okay. You mean to say that we should ignore the strike price? We just must see the option prices.
Yes.
And then choose the option, whatever it is, right?
Correct. Correct.
Okay, here nowhere you are talking about the strike prices. You are just talking about the option pricing of option prices, where you will choose the option price where both the calls and puts are same, and then see how they move. When they go
Correct.
when say it goes to extreme, say let's say call goes to extreme, and it is not able to go further down or further more, then what you do is you buy a put which was earlier at same option premium.
Perfect.
Is it right? Okay, fine.
So, usually, you can understand from this, G column. Okay, this is the main
Yeah.
Fibonacci number. Okay. So, if you take a position at 233, okay, you take one position at 233.
Okay.
So, before the call option moves to 377, the put option will move to 144. So, what is the difference between 233 and 144 and 233 and 377?
Okay, it's two thirty specific difference 89.
Yeah, 89, and here it is 144, right?
That's right. Yeah.
Okay. So, when you take a position at, say, in the start of the day, the one option is 233, perfect 233, okay?
Right. Yeah.
Before, say, two options, let us say 80,000 call and 80,000 put, both are at, 233. The
Okay.
put option will come down to 144 and call option will go to 377.
Right.
Okay. So, if it is not able to cross 377, you are going to take a buy call at 144,
Right.
keeping 377 as the reference number.
That's right.
Okay, as long as it doesn't break 377, your option is safe.
Right.
And it is going to return you at least, 50 points from there.
Right.
Very simple. You can follow it,
One more confusion now arises when you say it's 233. Earlier we were considering 233, 238, 241, this line where option call, it should be a call option on this side, right?
No, I'm just, this is just for an example. What I have told you is, just for an example. These are
Okay, this is an example. Okay.
Yeah.
Yeah.
So for you to understand, the difference between
So you try to explain the theory behind what you are doing by doing
Yes.
this.
Yes.
Fine.
Guru, I think Nico has got a doubt. You can unmute her.
Sir,
Yeah.
how come his figure 16, 18, 19, 20?
Yeah. So these actually, as I told you, this G column is the Fibonacci series. This is the Fibonacci series, main series, okay? And these are all the Fibonacci retracements. From here, it can correct to these levels. And these are the projections. Like, in your chart, if you see, the left side you will know the past. Right side is the projection, which you don't know. Like, if you choose this chart, you know your left side. These are all past. Okay. What do you know about the right side? Future. You know where it will go. Is there any number, any projection, any number that you don't know, right? So this gives you, this is the midway pivot number, and this is your past. From here it has traveled to this level, and this is your future.
Actually, how is come 16, 18, 90, 20? That is.
Sir, Fibonacci series, you can see a lot of videos that will give you very basic idea. Say here, you can see 0, 0, this 1. 0 plus 1 is
1.
1 plus
Okay.
1 is.
How come is 16?
Say if you divide these two numbers, you know, 110 and this left and the other side, you will get the Fibonacci ratios. If we divide these numbers, any two numbers, we'll get the Fibonacci ratios.
26. Guruji, up to 10, you use 9.
Yeah.
After 10th, which row do you use?
I'm talking about this, other second row, eighth row.
8th row, okay.
Yeah. And after that, seventh row.
Thank
For
you.
the minimum formula, I use the eighth row. Eighth and sixth and fifth row, I use it for the minimum formula.
Okay.
So, any queries on this?
Nico had a doubt.
Yeah, I just wanted to know, you were talking about a call trading at 233, and at the same time you predicted that the put's going to trade at 144, and then something you told, I did not get that part.
Yeah. Say, Fibonacci series works this way. Okay, 8 plus 13 is 21. 21 plus 13 is
Okay.
34. 34 plus 50 is 89. Something it goes, it's a series. Arithmetic progression, or it's a organic series. Okay. What I was telling is, at the start of the day, both the options, the identical options, were at 233. Okay. When one of the option comes to goes to 377, the other option will come down to 144 in an ideal day. Okay. So if the one side is not able to cross 377, the other side is a buy with small stop loss.
Okay, got it.
Say,
Thank you.
let us say I asked you to take a position for 55 priced options. Okay. Last month I asked August expiry. I asked people to take 55 options. Before that depreciated to 21, the other side went to 89 and 144.
Right.
So this goes 2 points down. 55 to 21, it is the difference is around 34 points, whereas 55 to 144 is almost 89 points. This difference will get.
Jasmine,
Jasmine.
actually, I would like to answer one of your questions. How 16, 26, 42 they are Fibonacci? Actually, they are not Fibonacci but extensions. If you divide 16 by 26 or 26 by 42, you will get that golden ratio 1.61, that one, 1.615, something like that. That is why they are extensions and considered as Fibonacci numbers. Go on, Guru.
Yes, Jasmine, you are correct. Yeah. Hello, it was Jasmine, right?
No, this is Srinivas. Srinivas on the Guru.
Yes, Srinivas.
Go on, Guruji.
Hello. Hello.
Mahendra, I'm not clear about something you would want to.
Hello.
Yeah, tell me, Ramesh ji.
Hello, Murali here.
Yeah, tell me, Murali.
Yeah. Any Fibonacci into 2 is another Fibonacci. If you can add 8 into 2, 16, 21, 42. That can also be a Fibonacci.
More than that, I would say
No.
division actually.
Hello.
One number divided by other number will give you 1.615 like that. That will be Fibonacci. We can consider that. Instead of multiplying with
55 plus
2.
55, 110 is also there in this. 55 plus 55, 110 is there in the screen. If you can see, that is also there.
That may be correct for few numbers, but the golden ratio is the correct one. If you divide 16 by 26, 42 by 68, or
Yeah.
110 by 178.
Yeah, that's the ratio. Yeah, here it is. This number is also there, I'm telling.
That's okay. The number is there. Let us see the use of it. See, all of us, use our mobile phones and everything, but we don't know what's the technology behind that. We have analog, we have digital, we have things traveling to mobile towers. It is going to you. Let us not go deep into all those things. Basic is this works, and as long as it is workable, that's great. Technology should not overwhelm you. These series should not overwhelm you. They should be simple enough for you to understand and take it forward, do something, execute, make money. That's the point behind this.
Exactly. We should not consider these as mathematical Fibonacci numbers. These are for our option trading.
Correct.
Guruji, after 10th,
Yeah.
you will prefer options which are priced at 199. Two similar options.
Yes.
Okay, thank you.
Guru Mahendra had a doubt. You can unmute him.
I need to unmute this.
Mahendra, he had some doubt, so he's muted right now.
Okay.
Srinivas, can you unmute him?
What I'm
I'm
saying,
not able to
I have
unmute.
unmuted, but he has muted himself. Now he unmuted. Yeah. Actually,
Hello.
Yes, Mahendra ji, welcome.
Welcome, sir. Welcome. Thank you, sir. Now it's clear. It was not clear before, sir.
Mahendra ji, can you just introduce yourself?
I am Mahin Kriplani as a trader, trading in basically in the index futures and options,
Okay.
and residing in Gwalior, Madhya Pradesh.
Oh,
It is a real great experience to have this type of class to know about options. I am not very comfortable with options in earlier.
oh, okay. Yeah, tell me your query.
Till now, it's not a query. It's a program which I am attending for the first time in my life. It's my first experience, sir.
Guru Mahendra, I saw your message saying the reason I got you unmuted.
Oh, okay. So this is clear. I can go to the next. Is it?
you can go ahead.
Yes, Guru.
Any questions? I think you should be having a lot of questions.
Yeah. Hello. Hello, Guruji.
Anand ji, welcome ji.
Yeah. I was just checking 18,000 Bank Nifty call.
Okay.
Today's low is 183.
Yeah.
And how should one go with it?
See, what was the today's high?
307.80.
Okay, so ideally it has come down from around 322 levels. Maybe yesterday it would have been 322.
Yeah.
Okay, from 320 it has come to this level.
So can I just say clear his doubt? Let me just see whether I have understood or not.
Yeah, Niku.
Yeah, I think you should enter around then 199 levels and keep a stop loss of 178. It might go back to 233 levels.
Actually, I advise people to take position once it crosses 188. say in any series, say between 100 to 200, 200 to 300, the first level Fibonacci also acts. 89 acts as a Fibonacci for 189 is a Fibonacci. So I actually ask people to take position at 188, 189. 144 plus 55, 144 plus 55 is 189. So I ask people to take position at 188, 189 levels.
Where is this 188 coming from?
144 plus 55. Any addition of this Fibonacci series is a Fibonacci number also. 144 plus 55
Like
is 189.
190. Actually, we consider the 89 and 189, 289, 389, all of them as Fibonacci.
Fibonacci.
So we should take position at the Fibonacci numbers.
Actually, when it comes back from 178, you should take position.
We should wait
Yeah.
for the option to break 178. Then once it crosses again above 178, we should take the position.
Perfect. Don't catch a falling knife. That is what I said.
Hello. Hello, Guru.
Yeah.
Hello.
Yeah.
Murali here.
Yeah.
Guru was telling 189 is nothing but 89 above 144. You can see 89. 89 add 1 to that 95. 90 divided by 2 45. 144 plus 45 189 is referring to that only. Hello.
Complicating now.
Yeah.
Hello.
Got it, Murali.
You only explained to me earlier.
Yeah.
Previous number divided by 2 plus the Fibonacci. 144.
So once you do some kind of mock trading, I think all of you are aware about NFC Pathshala, where they give you 20 lakh rupee capital to trade.
Currently, it's not available.
Okay, I think ICC Direct is giving for around 199 per month, or around 199 for 6 months they are giving, which is very good. Invest the 20 lakh given by ICC Direct. Trade with this. Take big risks. You will be stunned. Any new theory, don't put it directly into the market. Trust, but verify. Verify using a tool. Record the outcomes. Then take it forward. That's what I would advise, and I have been doing. If I had learned something from Vishal about Andrew's pitchfork, I don't directly try in the market. That will be a costly mistake. I try with ICC Direct. I do mock trading. Then once I am successful with 20 series, I implement in the market. So this is about the basic things, okay, where you need to enter and all. I have a daily run rate formula. So I can go ahead with the daily run rate formula.
Yes, please.
Yeah. Daily run rate formula is a no-brainer. If you use even a small part of your brain, it will backfire. It's a no-brainer. I just take 8,100 call and 8,100 put. When the market is at 8,100. Okay. And every 50 points uptick, I move on my call or put accordingly. Like if I had taken 8,100 call and 8,100 put today, market had gone to 7,963. Okay. I will downgrade to 8,000 put. Okay. And wherever it takes support, I'll withdraw that 8,000 put, then wait for some time. Then downgrade to 7,950 put. This way, I just slide my, downgrade my options, whichever side the market moves. and I keep the other side just like that without any disturbance. Last time I think I had told Nico also, I took 8,200 put and 8,350 call. 8,350 call, I just downgraded till 8,650, 8,700. 8,200 call, I was just keeping it. And that 8,200 call returned almost 450 rupees. Okay. This will give you daily run rate. Every day you'll make, if the initial days market moves 2%, you will get around 20 to 25% return, one side. Okay. And once the market moves 400 points, you get almost your capital back, and the other side is free for you. That will be another 20-30% net profit for you. So if you invest 1 lakh on perfect hedging, in just 10 days you will make 20% profit. So this is about the daily run rate formula. You don't have to do anything. Just keep a tab, ask someone to ping you. Yes, market has come down by 50 points. You exit your exiting option, downgrade to the next option. If it corrects another 50%, downgrade to the next option. This way you will save the premium earned. If you had hedged at 8,100, 120, let us say, it has come down to 8,050. Your 8,100 put option would have appreciated by some 25 to 35 rupees. Once you downgrade to 8,050, the 35 is with you. Nobody can take away. And once it goes to 8,000, okay, you downgrade. Nobody can take that 80 rupee difference. Okay. So that is the logic behind that. And with this, every week, if you take a position on Monday around 12 to 12:30, by Friday 2:30, you will have 20% profit. If you invest 1 lakh, you will get 20,000 back. As simple as that. This is about the daily run rate formula. Any queries on this?
Just one question, Guru. This is Ramesh here.
Yeah, Ramesh.
So basically, you're working this on a hedge. You got both sides. You got a call and a put, and if the market is moving down, then you're downgrading the put and keeping the call. Is that what you just stated?
Correct. Perfect.
Okay. Thank you.
Srinivas? Hello.
Sanjay ji, yes, I'm hearing you.
Actually, I was disconnected. Can you again please explain the gist of what you told about daily formula?
Okay. This is about daily run rate formula. Very simple to use.
Yeah.
At 8,100, when the market is 8,100, you buy 8,000 call and 8,100 put. Both.
Okay.
Okay. Don't bother about the strike prices. It may be plus or minus 2-3 points. Usually at the money option.
No, when the market is trading at 8,000, we buy 8,100 call.
No, at 8,000 you buy 8,000 call and 8,000 put.
Okay.
Strike price should be the same. Near to
And the market should be at 8,000.
Yeah.
And
Strike price should be the near to the market futures price.
Correct.
No, Guru,
just
at 8,000, you have to buy 8,000. You need to buy
8,000 call and 8,000 put.
8,000 call and 8,000 put.
Correct.
Not
Because
out of the money.
If you go for 8,100 call and 7,900 put will be costed by 20%, call will be cheaper by 20%, put will depreciate faster, call will appreciate lesser. So you will lose, that difference. Say whichever option price is more, okay, that will depreciate faster. When that one side depreciate faster, one side depreciate by 50%, the other side appreciate by 20%, you're losing straight 30%. So at the money, if you hedge, yeah.
So what you're saying is that you need to buy in the money options, at the money or in the money.
At the money or in the money.
At the money.
And take positions post 10:30, 11 when the heat is settles down. if you take it 950, 920, option pricing may not reflect true value. Let the dust settle down. Keep your urge to take position by 930, 940. Options should be taken only after the market settles down. Fibonacci time periods is 950 to 920, 920 to 940, 940 to 1020. Between 1020 and 1040, market stabilizes. You take position between 1020 and 1040. I suggest 1030 to 1040.
These positions are intraday, Guruji, right?
No, you just carry on. Last month I carried on. I carried on from 8,350 levels. I carried on till 8,650, where I made almost 150% profit. My that 150 rupee I invested on 8,350 calls became around 440 rupees when the market was at around 8,650. So my investment was around 270 or 265. One side itself I made 450 rupees. So I just was on hedge when it came down to 7,667. That was a huge money.
So Guru, can you just open the NSE option data now? And in the money option should be very costly, right? For right now, if you see where did the market settle down today?
8,020,
8,000, yeah, 8,000. So, so what is the price of 8,000 call and 8,000 put today? 8,000 put will be cheaper than the call, but
will be the same price because puts will always be costlier.
So
and I don't advise people to take it on the day one. I usually ask them to take it on Monday.
Okay.
Succeeding Monday.
So Monday to Friday you need to carry on and then close your positions by Friday.
Usually I don't close. Within Friday it gives you 20% return. That's what I was saying. I don't actually close. I just carry on.
So what do you do? So 20% profit you take and then you roll over, right? You roll over or upgrade or downgrade to the next level.
No, actually on Friday by 2:33 you will come to know whether the VIX is on the higher side or VIX is on the lower side.
Okay.
If the VIX is on the lower side, I just carry on. If the VIX is on the higher side, maybe above 17, I exit and take position on Monday again.
But this will work only when the market is highly volatile, right?
When the market is less volatile, this will give you more return. When the market is more volatile, the returns may be bit less. So today market went to 8,123. It came to 8,050 three times. Went to 8,123. Crashed to 7,963. And again went to 8,053. Came to 8,011. Today was a volatile day. Today they'll use to depreciate DKG options. So volatility actually depreciates the options. If the less volatility, options do not depreciate.
But for example, if you say no, the market came and settled down at the same price, right? So from 8,000, if I'm going to buy 8,000 call and put, and the start of the day, and at the end of the day it again closes, say it forms a doji, then only the time value is killed. So both the sides will be losing, right?
Correct.
But even though the market can be volatile because it can go till 8,100, but it can still settle down at the same price. So at the end of the day, there is no volatility, right? From day to day. Between
that's I told. Once it goes to 8,100, downgrade to 8,100. Call. Okay. Once
okay, you need to. Okay. Got it.
Once you do that, if it comes to the 8,000, today you have 30% profit.
Okay. So you need to do that constantly.
Yes. Set an alert with money control or or any of your friends. Once it goes to you don't have to even follow the market. If somebody is working, they don't have time to just keep a tab of the charts, all those things. They can just do this, get an alert yes, it has gone up by 100 points, downgrade to the next level, just leave it. If it comes down, exit both things, the same day you'll have 30% profit, say.
Okay. Okay.
Any queries, friends?
Hello, Guruji. I did not get it actually because I was disconnected. So you were you had started to explain it, and then meanwhile many questions came. So can you please again summarize once so that I can understand?
Okay. It is very simple. Say, I'll put it in Excel also maybe. This, for example, I'm not telling you any real-time thing. Say market is at around 8,000. Okay.
Okay.
Futures. You take
Take today's
8,000.
example. Right now, 8,000 is at 195, 189. Maybe you can put that example here.
Not a problem. I'll just go with it. 8,000 call and 8,000 put. Okay. Both I take at around 150 rupees. Plus or minus 5 rupees. Okay. Okay. Your investment is 300 rupees, right?
Right.
Okay. Market went to 8,100. Right?
Okay.
At 8,100, 8,000 call would have gone to around 220 or 210.
Yeah.
Okay. Here you have upgraded to at the money option again at 145.
Right.
Right? So you have saved the difference between 222 minus 145. This difference you have saved.
If we are
Now the
switching
market-
from 8,000 call to 8,100 call.
Right.
So you have saved 85 rupee difference, 80 or 85 or 75, whatever the difference. Market has come down to 8,000 again, or 7,963. Let us presume. Okay. So here you are downgraded to 7,950 put option, or you are exiting your call and put both.
Okay.
You will make 20-30% profit today itself.
Right.
If you get 20% profit, exit the same
So
day.
Guru, one question.
Yeah.
Guru, one question here is that so if you use this bracket order concept, so if I say that I will 8,100, I will sell, and again 8,000 whatever that I'm going to sell, and then 8,000. Can it be done using bracket order?
No, it can't be done because you will not know the value. Market may go up, options may not go up. Today that happened. Even Murli was posting about that.
Oh, okay.
Market was going up, puts were not coming down. So how will you put? You don't know the value. No, futures you know the value. Exit at 8,100. But for options you don't have a value.
But you can say market, right?
How will you put market? It will take it at 8,000. When the market is at 8,000, then it will take no.
No, no, I'm talking about this bracket order.
I don't know how we will do it. Maybe if it is possible.
Okay.
Do
I
let
don't
me know.
even. No, I don't know how to do it. So.
Okay.
Yeah. Yeah. So basically,
Hello.
what you are talking about?
Hello.
Yeah. Who is?
Hello.
Yeah. Yes.
Hello.
Yeah, Murli.
Hello. Murli here.
Yeah.
I want to add something on this. Today it went to the 8,100 and it was not able to cross 8,100. I suggest at 8,100 you should wait for the 8,100 high. That time what the high price of 8,100 option, call option, you should buy above the high price. If you buy at that level itself, it will come down. Maybe we can buy above at that time's high. So this call money could have been saved.
This final detail. Say we will next session we will add how to enhance your profitability. Okay. So that will be the next session. This is basic. You don't know anything. I'm starting with that premise. You don't have time. You don't have time to look at the market. Okay. You don't know technicals. You don't know fundamentals. Okay. I start with this premise. Okay. So if you do this, you will make 20%, 30% profit. If the market is volatile, you will make 20, 30% profit on the same day. You can exit. Okay. Otherwise, within a week, you will make definitely 20% profit. That is the basic about this daily run rate formula.
So Guru, once you reach 20%, you suggest that you exit.
Yes. So next day you can start afresh with the next level, at the money,
Okay, so the depreciation you can account for. Okay.
You can account for, and next day the at the money option will be some 10% or 5% less. Say 20 working days. If you take one option as 100 rupee, each day that will depreciate by 5%. So next day, call and put together, it will depreciate by 10%. So you save that money. If you make 20% today, exit both call and put today itself, unless otherwise you are sure about the big gap up next day or gap down next day.
Just one last question, Guru.
Yeah, Ramesh ji.
This daily run rate, you can run it through right from the first day till the last day of the expiry?
I advise on the succeeding Monday. I don't advise people to take this run rate formula on today.
Agreed. No, sorry, but then I'll just reword my question. That means from the coming Monday till the last date of the expiry, can we run the run rate?
Yeah, you can run.
Okay, thank you.
Hello.
Yeah, Murali.
Guru, is this over, no? This daily run rate over, no?
Yeah, this
Hello.
Over.
You are telling about
if it is clear to all, it is over.
Yeah, Guru, just one sec. I will. Hello.
Yeah, tell
Hello.
me, Mayachari.
Yeah. So basically, if the market right now is at 8,000, we are going to buy 8,000 call and 8,000 put.
Yeah.
And then accordingly, we'll adjust it. If market goes up, the call value will increase, put value will decrease. That's why we'll adjust to 8,100 call, and will 8,000 P will remain same.
Yeah, you will not disturb. The lower priced option. Never. If at all, you need to exit the higher priced option.
Okay, exit higher price.
You will exit 8,000 call?
No.
You will exit 8,000 call?
No, you will exit 8,000 call and downgrade to 8,100 call. Okay.
Yeah.
Now you have got. It is not able to pierce 8,100. Okay.
Right.
It has gone to 8,100. It is not able to go up beyond that. You know it is coming down. The bank Nifty says it is coming down. Suddenly you feel the market is coming down. There you can take 1 or 2% risk.
Right.
1 or 2 points risk. Okay. If at 8,100 you can buy once. Exit price. All those things you can do. So you are expecting some 100 to 200% profit. So be willing to lose 5 to 10% out of that profit. Whenever it is proving that today's high was 8,123 or 8,104 in the morning, right? So at 8,104, be willing to exit the call which are taken at 8,000. Okay, and wait for a few minutes. So if you have waited for once it has come down below 8,104, you have exited the call. It has come down to 8,000. Your profit the same day becomes 70%, right? That's a technical. Maybe next time I'll train you on how to do that. Okay.
Hello.
Yeah.
Hello.
Yeah, Anandji.
Yeah. Currently market is at 8,000, and if we go towards 8,100 and we downgrade to 8,100, and again Nifty moves towards 8,200.
Yeah. You downgrade to 8,200.
Okay. And we get a rally towards 9,000, then and the put will lose.
Let it be. You are going to get 500% value, but you should be happy. Put becomes zero. As I told you, you are taken at 144. 8,000 call and 8,000 put. Okay. Before the put goes to 89, the call will go to 233. From 144, before it goes to 55, the other side will go to 377. Before it 55 to 34, the other side will go to 610. So you should ideally pray for the other side to become zero. When it becomes zero, other side will become 1,597.
We are supposed to hold 8,000 put.
Yes.
As we reach.
Hello.
Guruji, I just wanted to ask you one thing. This applies for only Nifty, or we can do it for Bank Nifty as well?
Bank Nifty as well. I do predominantly, Bank Nifty.
Okay, and what do you have to say about the time decay in this? As in, the option prices has this thing. I mean, intrinsic value and time value. So what about the time value? I mean, will the option price not decay with time?
Yeah, that is why, taking a position for Bank Nifty needs some kind of, waiting, patiently waiting. Okay. On one day, both call and put will depreciate by 50% in the first week. Okay. Usually call appreciates and puts, depreciates, right?
Right.
On one particular day, maybe on yesterday and the day before yesterday, both calls and puts would have depreciated by 70 to 80% on both days. Okay, you should ideally wait for those, 50 to 60% decay for both calls and options on a day. Then take a position. You should not take a position when in the just like that. If you take it, you'll end up with 50% loss straight away.
Okay, so you told us to take position on Monday. So
Monday for
we should
Nifty.
not be Monday for Nifty and not for Bank Nifty. Okay, okay.
Bank Nifty, wait for a day when both call option and put option depreciate by 50%.
Okay, thank you.
That will happen on a very range bound day.
Okay, thank you.
Guru,
Guru.
will it be applicable for regular stock
Guru.
options as well?
Regular stock option, that's a different strategy. It works on Andhra Bank, it works on Ashok Leyland, bigger size, higher traded, shares. Not on Asian Paints or lesser traded shares.
Okay.
Hello. Guru.
Ashok Leyland actually works dot. Yeah, tell me Murli.
Guru, for example, I want to add something on this. Today's 18,500 call and 16,500 put, both were at 144. You remember I told you both are at same price.
Yeah.
One went to 269 high.
Yeah.
Another went to 88.85, which is 89 Fibonacci. So this itself is a clear indicator what you are explaining. One side it only 55 rupees loss. Another side gain is about 100. Yeah. That's the thing. That was Guru telling. So
yeah, Murli, but in your example, you say, the strike price are different.
No.
We are talking about the option pricing, G. We are not talking about the strike price.
No, see, when we say at the money option, definitely the strike price will come into picture.
No. The other thing which I was telling, when you take 144, both things. You are talking about daily run rate. You are talking about the other formula.
Okay. Got it.
Yeah.
Fine. I got it. Yeah.
I have the data with me. That's why I told.
No problem.
Yeah.
Any other queries on this, on daily run rate? Say daily run rate. Once you start making, a practice, do it correctly without, any kind of emotional thing. I want to exit this. I want to exit that. All those things. There's nothing like daily run rate formula, in this market. Very simple, very effective. You can't lose, capital. In any other thing, there's a chance you may lose capital. But this daily run rate formula, once you take it correctly, you can't lose capital.
Let me put my understanding. We have two methods. One is daily run rate. For that, we have to consider PE and CE for same strike price. And for the second formula, we have to consider same value for whatever may be the strike price.
Correct.
Perfect.
Yeah.
And if it is totally different, you have 7,000 put option at 144 and 8,000 very near call option at 144. then you have to be very careful. Puts will depreciate much faster. There should be some kind of correlation.
Right.
Say, because whenever puts are priced very high, like 40%, 30% higher, they'll depreciate much faster. Just 10 rupee tick from 144, it will go to 120. So that you have to be that's a bit subjective. You need to learn over a period.
Yeah.
As I tell you, take mark trading account from ICC Direct, take 20 lakh credit from them, trade it. You will be surprised with a 1 crore profit within 15 days.
Guru?
Yeah.
Okay, very good. I wanted just as a personal question, how much you are earning every day?
I would not wish to answer this because I usually do not talk about money. Today was on different only post I made in many years about my earning last month. I always follow principles. Money is a byproduct.
Great.
Guru, man's income and woman's age is not asked.
Correct.
Great.
So, any other questions? And one more thing, after post this meeting, definitely you will be having a lot of queries, simple queries. I always, my mentor used to tell me, do not, think of, this is a very silly question. If you ask, people will think, I don't know anything, something like that. Be a 1 minute fool. Once, you get the clarity, you'll be wiser for the life. If you feel, people will think I'm asking silly questions, people may think bad, and if you don't ask that question, then you will remain a fool for life. So please don't have any inhibitions. Ask any silly questions. At one, it will clarify you. Two, it will clarify the identical silly question which the other person may be having, which is not asking. Hello.
Yeah.
Yeah, Guruji, it is very clear.
So any questions? And one more thing, in the next session, whatever things we have spoken about, I request people to note it down. Whatever questions they have, maybe today they are not prepared. The agenda was not set, so maybe not prepared. Let them scribble down the questions. Any thing, simple questions. Let them post. Then we'll take it to the next level. Right?
Yes, very good. Yeah.
So, anyway, I am recording this session. I will put it again in Google Drive. I will share you if you want to. Maybe you can see this again and again so that you will get questions. And Guruji, do you want me to schedule one more for tomorrow or day after tomorrow, or that's all for this week?
Tomorrow it's okay. Tomorrow, around same time, if it is comfortable with all, people will be having their family commitments. We people traders get only Saturdays and Sundays, so people may be tied up. If it is okay with people, I am okay. This is my passion. I am on.
Okay, I will schedule at 7:30.
We are on tomorrow.
Hello.
Somebody is talking.
Yeah. So are you scheduling tomorrow any training?
Yeah, I will schedule at 7:30 tomorrow then.
Fine. Very good. Thanks a lot, Guruji.
Yeah, thanks, Tan. So,
I am not seen at
Thank you. Thanks a lot, Guruji, and good night too.
Thank you.
Srinivas, one question for you.
Yeah, Ramesh.
Sir, Srinavar, since people are now getting interested in this, and right now you got only a trial version, may I suggest if you can go in for the paid version and we can all contribute?
Yeah, sure. Anyway, it is valid for 30 days. After that, we'll go for paid version.
No, but I think what I saw on your message, I think it's only for 15 sessions. It may be valid for 30 days, but maximum I think it's 15 sessions.
No, I don't think so. Because I spoke to the customer care, they sales people also. They said it is actually there is no difference between this version and the paid version. Only thing is after 30 days it will get disconnected, but we can use a number of sessions till 30th. I mean till 30th.
Okay, so on right, so on WhatsApp, I'm going to submit this third proposal of mine that we all can contribute whatever the charges are, and we can continue with this. I think it's a good thing. Like Guru also suggested, after these training sessions are over, at least we can meet almost on a daily basis and discuss our strategy for the next day.
Yeah, sure. It is very minimal price, hardly 3,000 per month. So I think we can
Yeah,
contribute.
whatever it is, but I think why should you have to pay that? I think all of us should contribute, no?
Yeah, that's not a problem. Hello. Yeah,
Yeah, exactly. I agree with what Ramesh ji is saying. I think if we should all contribute to this learning.
Contribution is not a problem, and basically this system is free. It's for 15 days. We can use on another ID for 15 days. So that's
why do you want to do that?
See, I know, don't, they are doing some good thing. Don't do that.
I know. I don't think that's a good suggestion.
I will not do that. I will not do that.
Hello, sir. One question. Sir.
Yeah. Yeah, tell me, sir.
Hello.
Tell me, sir.
Balaji Brown.
8,000 put and 8,000 call, 150 each.
Sir, the voice is breaking.
My voice is breaking. Hello. Hello, sir.
Okay, all those people having a problem with the audio, kindly use a headset. I think that is all your problem.
Hello.
I think people are typing in the keyboard and then speaking also. That is which is creating issue. I think.
No, I'm not typing. Hello. Hello.
Tell me, sir.
We can hear you. Go on.
8,000 call and put both. If both are left unattended for 4 weeks, what will happen?
If it goes to 8,300 and comes to 8,000, forms a weekly doji, okay, then you will be straight under 40 to 50% loss. 1 week depreciation will be there. Each day a call depreciate by 5% and put depreciate by 5%. 20 days, let us say 20 days are there in a trading month. Each day the calls and put will depreciate by 5%. That is the premise. So if we left unattended, it goes to 8,300 or it goes to 7,700 and then comes to settle down at 8,000. 5 working days into 5%. So 25% on call, 25% on the put. You lose 50% if it is a doji week.
So daily I have to monitor.
Yes.
Thank you.
Thank you, Guru. Very educative, and we hope to meet tomorrow at 7:30.
Yeah. So please, don't keep Indian Standard Time. Request not you. Request people to be on time, so that we are not waiting. And maybe Sridhi, I would suggest 7:30. Anyone 7:31, anyone logs in, they'll not be allowed to log in.
Yeah, sure.
Good suggestion.
Say, we should keep up. Say, the time is precious for you, for me, and all. So I request all to keep time. If it is 7:30, people should be there at 7:20, not 7:31.
Exactly.
Yeah, otherwise we will lose time for repeating the same thing.
Yes, Ji. Okay, thanks for the time.
Thank you.
It is a pleasure talking to you.
Thank you. Thank you. Thank you. Good night.
Thank you.